Hello, ladies and gentlemen. Welcome to today's GDMFX European Session Market Outlook. You're with Martin Panev, Chief Account Executive, Trading Analyst with the company. As usual, starting with a short coverage of the markets yesterday and today. North American markets, the Dow, no movement yesterday. Nasdaq 76 points up, new all-time high. The Dixie is up to 97.60 almost. Philadelphia Fed manufacturing survey, 6.3 points worse than expected, a sign that the companies are still grappling with the effects of the strong dollar that has curbed exports. The housing market index, as expected, initial and continuous jobless claims, 4,000 better than expected, and also 0.80 better than expected. Yesterday, Ms. Yellen testifies. She said that she doesn't want to see inflation linger below 2%, and the risk lie on tightening too early or too late. Today, we're looking at CPI data year on year. Also in Canada, Bank of Canada CPI index, core CPI index as well. And we have a few speeches from Fed Stanley and also another member, housing starts, building permits month on month, all of those today. European markets, the DAX 100 points up, CAC 40 160 up yesterday. The ECB interest rate decision was yesterday, remained unchanged. There is a contraction in the European trade balance, 21.2 billion. CPI as expected month on month and year on year. And core CPI as expected. Basically, Euro area quarterly real GDP growth was confirmed at 0.4% in the first quarter of this year, supported by contributions from private consumption and investment. Looking ahead, we expect the economic recovery to be broadened further. Domestic demand should be further supported by the European monetary policy measures and their favorable impact on the financial conditions, as well as by the progress made with the fiscal consolidation and structural reforms. Moreover, the recent decline in oil prices should provide additional support for households, real disposable income and corporate profitability, and therefore private consumption and investment. Yesterday, the president of the Eurogroup said that he would like discussions about the possible Greek exit from the Eurozone to stop, and he hoped German lawmakers would support opening talks on further Greek aid in a parliamentary vote, which is due today. The Germans are not really fond of that. Moving along to the UK markets, the FTSE 100 started with a gap. Moved up total of 45 points yesterday and closed at 6,730, a little bit above. Mark Carney said that the UK interest rate rise is built for next year. He plans to rise IR to about half of the maximum level it has reached during the recent years. Also, Mr. George Osborne declared the fact that the UK money won't be spent for Greek save as a significant victory. He said that the European Union talking these funds would have been to cross the red line. Next week, on Monday, we're going to see the public sector net borrowing, which is on monthly basis. On Wednesday, we have the Bank of England Monetary Policy Committee votes and also the meeting minutes and the inflation report hearings all on Wednesday. Moving along to the Asian Pacific markets, starting with Nikkei 225, 172 range, ended up with almost 80 points up yesterday. Today opened with a small gap of around 30 points. The greenback edged lower versus the end this session on the back of profit taking after touched fresh 6-week high against its major competitors, backed by the Fed Chair Yellen's hawkish comments and the recent two back-to-back sessions of upbeat US macro data releases. Also, Hong Kong shares headed for their first positive week in about 4 weeks of decline. The biggest mover yesterday was the pound versus the Japanese yen, almost 40 points since Monday. Next week on Wednesday, all industry activity for the yen, exports and imports, foreign bond investments in stocks and bonds. And also we are going to see the merchandise trade balance, which is going to come out, all of it on Wednesday. Big week ahead next one. Yesterday, the Australian dollar consumer inflation expectations came out higher than previous. Now that the Brexit issue seems to have stabilized, Chinese growth is doing better than expected, and the Aussie employment appears steady. The focus will be on whether the Royal Bank of Australia erases the last of their easing bias and keep the interest rate unchanged. Inflation is expected to remain in check despite a sharp rise in petrol prices, encouraging the Reserve Bank to leave interest rates on hold. The Consumer Price Index has risen at an annual rate of 1.7%. That is still below the RBA's target inflation range of 2 to 3%. Next week, on Tuesday, RBA's meeting minutes, and on Wednesday, RBA trimmed CPI quarter-on-quarter, year-on-year, Consumer Price Index quarter-on-quarter, year-on-year. The same day, also, we're going to look at the New Zealand interest rate and monetary policy statement. Moving ahead to the commodities sector, starting with the S&P 500 index, which had a range of 13 points, currently a little bit over 2,110 points. Gold had a range of $6, silver had a range of 30 cents, and WTI had 1.35 range at almost $51 right now. That is pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.